To live. Omar Najia is moving to Moscow and Beijing in the morning. Never mind the south of France. I didn't hear him say, I've been begging my office to open that bureau, that office in Shenzhen, which just got locked down yesterday with 17 million people. Shanghai about to face a lockdown. China is finally facing a countrywide COVID outbreak, which could be the biggest threat to global oil demand, perhaps. Let's kick off this morning with oil prices trading a little bit down in Asia. Omar Najia, global head of derivatives for BB Energy. Omar, your thoughts on where the oil market direction is at the start of this week? Clearly, we're still on that big upsurge from the geopolitical risk out of Russia, Ukraine. How do you see the markets this morning?
Yeah, so basically, I think no change. We had like a spike high. We came off a little bit. I don't think there's any. I mean, for me, I'm not going to be selling unless the market goes down big time and goes down strongly and kind of stays there. So I think there are bigger kind of.
Well, at some point, you're going to have to make a call when that staying there thing, at some point you're going to have to say that turn down. Obviously, you're saying you want some indicators that reversal has permanence about it, has something more substantial.
Yeah, so basically, you say, in markets or in anything you say, you want to hear it's not over until the fat lady sings, like in operas, the fat lady comes out and sings.
I will not be singing, but I will try, I'll give it a warble.
Yeah, so basically she's not sung, she's not on the stage, and I'd like to wait to see that actually happen. I think there's a lot of kind of different, moving parts. What happens to the economy? What happens to the dollar? What happens to inflation? What happens to commodities? What happens with sanctions? All that kind of stuff. So all that is telling me not to kind of, there's no rush to basically be short the market and plant a flag and say, down from here. So I'm constructive. I'm happy being long the market, and I'll stay long, and we see how it goes. There's a lot of moving, bits. So let's say the war ends tomorrow. Does that mean that sanctions end tomorrow? No. Let's say that they decide to escalate in some way. What happens? China, Russia, all that kind of stuff. So I'm not, and the stuff with the Iran deal, last week it was like for sure. This week is like, well, not really. And, same with Venezuela. They want Venezuelan oil, and Venezuela said, okay, recognize Maduro as the legitimate head and all that kind of stuff. So there's a long way to go, I think.
Let's go across to London and welcome Maliha Bengali, founder of MB Commodity Corner. Maliha, we do seem to have a week ahead of us in which there is a lot of convergence on the markets. Obviously, the tragedy of Ukraine continues. We've got the Fed expected to pull the trigger on the first rate rise this week for a number of years. And now we have this big flashing red light in China. How do you see the confluence of all of these things playing out in all the financial markets this week?
So the oil market and commodity markets being driven by two factors, macro and micro. We know the micro side of the story has been very strong, with demand holding up very well and supply obviously being exacerbated.
Maliha, if I might just, sorry to interrupt you, your volume is a little bit low. I don't know if that's you or me, but just if you could speak closer to the mic or something like that.
Can you hear me now? So
that's better, yeah.
The oil market is driven by both the macro and the micro side. We know the micro side has been strong, driven by very strong demand and a very tight supply market that's been exacerbated by the Russia-Ukraine war. Taking a step back, which I've had a lot of talk with my clients, is that the macro side is actually much more important than the macro right now. Forgetting the war for a second, before we came into this war, the macro market, the Fed was actually looking to raise rates because inflation is averaging 8%, as we saw in February right now, and possibly now in March will go higher. The Fed is in a bit of a catch-22. They have to raise interest rates to slow the economy down, get the inflation in control. That is actually negative for demand. So on the macro side, when you look at hard assets and inflation, this sort of tightening procedure on the macro side will take money out of risk assets. This is why we've been bearish on technology stocks, equity markets, bonds, and commodities are something that's driven by the bottoms-up market, but eventually the macro does tend to take over. And that's why oil price, once these things do settle down, will start to ease and fall lower. Now, with the commodity markets this week, obviously, we have the Fed looking to raise interest rates. I think 25 basis points is in the bag. possibly could have 50 basis points, but the Fed has no reason to move back on policy. They cannot raise rates, they cannot taper their asset purchases until the equity markets fall 10% or more. The Fed put is a lot lower than people expect it to be, or inflation comes down. So they have to tighten, and that tightening economic policy is going to take asset classes lower. Now, once the demand on the oil side and the market of gets lower, that's going to take prices lower. So we are in a point of demand destruction right now. We got to $140 per barrel of oil, and now the point is, where is that demand destruction? But the macro is very sinister and it's very weak from a risk asset point of view. I think that's going to be the impact this week.
Let's welcome Ali Al-Riyami, consultant and former Director General of Marketing at the Ministry of Energy and Minerals in Oman. Ali, we had the OPEC Plus meeting earlier this month. They obviously chose to roll over and maintain the sort of incremental increase. And then we had the biggest move last week really was this story of whether the UAE ambassador in Washington had said the UAE or OPEC Plus may look to increase supply, and then UAE and Abu Dhabi seemed to step back from that. But ultimately, a very big drop just on the indications that maybe somebody will talk to somebody about increasing supply, and we saw a $10 drop in the market. What does that tell you about the structure of this market this Monday morning?
Thank you very much, Sean. But let's just go back to the gentleman Omar and also Maliha. I think I fully agree with them. There is a lot of uncertainties in the market at the moment, and there is a lot of if this happens, what this will happen, and a lot of uncertainties. And I think I agree that if we have a settled market, then we will start seeing the drop in the price to 80s or 75. Or something close to that, and this is where the OPEC is coming from, and that's why we still believe, or OPEC still believe, that there is no need to increase the production to the market because of the uncertainties that we see at the moment. That is one. Second thing.
Go ahead.
Second thing, it is about the statement from the UAE's ambassador to Washington. That was a big surprise to everybody. Even to the UAE's government, and I don't think that they have coordinate this statement with the position of UAE in OPEC Plus. So everybody saw that immediately after that statement, almost like $12 came down, and it didn't go back again to what it was. Although that. The Excellency, the Minister of Oil, came and tweeted and said that this is not true, and we are still stick to OPEC Plus decision. But again, it didn't really move so much. So this again shows you the uncertainties in the market, and also how volatile is the oil at the moment. And unfortunately, this will continue until we settle and everything goes back to normal. And God knows when.
Well, I'm not sure what normal is anymore, to be honest. Getting back to some sort of day when, I don't know, white picket fences and things existed. But nonetheless, Omar Najia, what does normal look like? You have forecast earlier that normal will return in the second, well, not normal, but ultimately this market will run out of steam in the second quarter, which seem to be much more of a technical analysis perspective, or is that guided by seasonal changes? Are you sticking to that viewpoint? And you're on mute, Omar.
Yeah, no, I'm sticking to that. I mean, nobody knows, right? So March, April, somewhere around that kind of time. And yeah, technical, but what everybody's saying is basically right and the same. So we have a lot of ifs. This market could still spike up big time. But when it's done and dusted again, I think OPEC Plus is right. The market's gonna come back off again just as quickly. The only question is, does this market still have a push higher? My gut tells me, and sometimes it's all it is. It tells me that the answer is yes. And why? It's
when you say higher, Omar, do you say higher than the high we already hit, like 135 or something?
Yeah. Higher than the high that we've already had, maybe 140, maybe higher. And the reason is that everything that you look at from any commodity that you look at is moving higher. And there's a lot of very interesting discussions about the US dollar. So everybody's used to the US dollar buying these commodities. So basically, you print this stuff and you give it to someone, and they give you something real, right? So you print these pieces of paper, you give it to someone, and they give you like a barrel of oil, or they give you some wheat, a bushel of wheat, or some lumber, whatever it is. And nobody seems to, people are questioning basically that kind of logic. In other words, this paper, what's it worth exactly? Not in terms of, fiat currency, but what if that paper that you get paid, people can actually just make it zero? The US can basically say that money that we just gave you is worthless. So what are you really getting for your commodities? It's very interesting. So
well, that's quite a sort of philosophical concept, if nothing else. I mean, ultimately, when you have a debt of $30+ trillion, what is the value of your currency if indeed it isn't underpinned by gold as it was pre-74? That's certainly a big idea. Maliha, I'm more concerned with the immediate idea of that. My sense that the shock and awe of Ukraine has possibly played out, and we are already back to fundamentals. None of you seem to be willing to pick up on the bat that I'm hitting here. China is about to go into total lockdown. The world's biggest importer of oil and every other commodity. This is a sell market.
So demand is something, okay, so the oil market moves in cycles. We've had a very strong demand market for the last year and a half, given the Fed induced stimulus, the global economy is opening up. So now looking forward, every sell side analyst is so bullish on the oil market because the demand is assumed very high. No one looks at demand destruction. China now going to lockdown is a complete outlier. Nobody's expected China to go into lockdown. No one's pricing is slightly slower demand into second half of this year. So you take a step back, as Omar said, right now, we don't know what can happen to Russia and Ukraine, but taking a step back from that, just look at the pure physical market fundamentals. If we see a demand destruction in second half, and if we see China actually locking down, that's a massive hit to travel demand. And if you assume those numbers, most sell-side analysts extrapolate the past demand to the future. They don't look at what the forward demand indicator is telling you. We've actually tracked macro forward indicators into our models right now, and you simulate that, and you can see how sensitive the oil physical markets are to those demand numbers on the macro side. So I agree with you. The market is pricing in complete extreme tightness and not any demand destruction. And that's where the outlier will be in the market, even if the war to persist on for a little bit longer.
Well, you did indicate in your earlier comment that there's still a possibility from your perspective that the Fed could go 50 basis points this week. I mean, it seems the consensus is around a 25. What's keeping that in your thinking?
So the Fed's, all these of the members coming out before this meeting, they've been jawboning the markets a lot tighter than they're expecting. I think the Fed Powell also made a comment about how they think 50 basis points is likely, but they're using the war as a hedge to hedge themselves. The Fed knows they've been caught up by the market. They're very, very behind the curve right now. They need to make a statement. 50 basis points, 25 is going to be irrelevant. The market will probably have a knee-jerk reaction. If they do 25, I think the market can rally, but it'll be immediately sold down because they will have to do more. Now we're in a situation where the Fed is no longer buying any more assets after March of this year. How is the S&P 500 going to survive when the Fed balance sheet is actually plateauing to falling down? That's another key indicator for this year, because we know the last 5 years or 10 years, the market has been a 1-for-1 correlation with actually Fed buying assets in the market. So that's the other thing. And the one more thing I think this market that I forgot to tell you about, this Friday, we had the massive quadruple witching, which is the reason why the S&P has been holding out a lot better than emerging markets or European markets, because of that negative gamma positioning. This very technical derivative positioning is keeping the market pinned. And I think that will actually lose support after this Friday. So I think the market's true weakness is going to be indicative after Friday. It's a very technical setup, and I think that's why the market's been very pinned between 4,250 and 4,400. And I think the momentum is really on the downside on back of these factors.
Ali, again, on the equity markets and financial markets, it does seem that it's sell the rally rather than buy the dip now. That sort of shift has been taken. In oil, it strikes me that each of these moments of any bearish indicator, like the UAE comments last week, we saw a big decline in the oil price. It feels like this oil market wants to go lower, but is propped up by sort of false gods such as the geopolitical premium, if you like. We do have built into this OPEC plus agreement now, the next step is an increase in the quotas for 5 countries. I wonder your outlook for that at this time going into the spring. Do they have the capacity, first of all, and what likely impact do you expect that to have?
Well, I'm not very much optimistic about the increase that will take place up to 1 month or 2 months from now, and I'm not so sure if the market is ready for any this kind of increases. Although that there is a lot of pressure from states and from UK, I think very soon the UK Prime Minister will visit Saudi Arabia, and maybe he will go to UAE after that. So there is a lot of pressure to increase the production. Although that everybody knows that the agreement with OPEC Plus, that these 5 countries that you're talking about, they will increase their production. So why do we need to have any extra pressure to increase more? And the news today, everybody is talking about there is no fundamentals to support the more oil to the market, rather than prices are going down. Shutdown in China is a surprise to everybody. So let's just face the facts and see what the numbers are telling us, instead of using the political pressures and also trying to increase the production. I think OPEC, they have made it very, very clear to everybody since the beginning that we will stick to our agreement, and we will continue whatever it has been agreed, and there is no change of position either from the states pressure or from anybody. So I hope that they will stick to their guns, and we will continue. Otherwise, we don't want to see the prices goes down again. This is very volatile market, and anything can happen. I agree with Omar. It can shoot up to 150 again. Nobody knows. This is not the right time to use any political positions at the moment.
Certainly the conflict in Ukraine is an unpredictable, we saw the Russians bombing in the western side of basically right on the Polish border. If this thing was to spill over, then it's like, wow, all games are off. But Omar,
again, we see the missiles from Iran to Iraq the day before yesterday, and let's hope that this will not really escalate.
Yeah, there's certainly some messaging going on there as well. Omar, the other thing more tangible over the sort of end of last week and over this weekend, and I'm wondering your thoughts of it from a technical point of view and demand, and that is the Western governments cutting taxation on the retail side of gasoline and heating oil, and not insignificant percentages, like double-digit 20% or so, propping up demand, perhaps. Your thoughts on that from the point of view of the market structure?
Look, in my view, I'll tell you my view. In my view, basically, there is no demand for oil is inelastic. Okay, meaning that basically, if you got to drive, you will drive. If you want to heat your home or cool it, you will. And that's the last bit of spending. You might not, buy the latest gadget or a new shoe or whatever it is, but, forget about demand destruction, in my opinion, 1. 2, anything to do with COVID in China, it's like 3,000 cases or whatever. It's tiny in a country of, 1 billion plus. So
yeah, but I think it's relative from the point of view of 2 cases, okay, 2 cases locks down a city. And it is now in 14 provinces.
Yeah. And basically, to reiterate, in the same way as terrorism disappeared when we had COVID, COVID disappeared when we had Ukraine. So you can forget about it. So it might continue, but nobody cares. So you can keep saying it, but nobody cares. At least the markets don't care. And lastly, to do with basically, oil. The problem with oil is not demand and supply. The problem with oil is that the West has decided to ban Russian oil. It's like basically they cut their nose off to spite their face. So you've got basically not just Russian oil.
That's a
Russian oil
slight
and oil
exaggeration. I
products.
do need to check you on that. The United States has voted to ban Russian oil. Nobody else has. And that is an
Well, yeah,
insignificant number given the fact that
mm,
they can
but you
get
don't
oil from
understand.
other places.
No, you don't understand. So you can say that you're not banning Russian oil like Europe does. But if you stop them using euros, if you stop them basically clearing, if you stop insurance, if you tell people that if you buy it, then they have reputational risks, then people are too afraid to buy it and nobody's going to buy it. So those stories that, Trafigura and whatever continue to whatever they're doing, that the point is you can't buy it and sell it again. You can't sell it to somebody because nobody will touch it because you've said that this is bad, this is this, this is this. So they've cut their nose off to spite their face. You're talking about 5 million barrels a day, which are basically going to work really hard to kind of try and, make up. But not only that, you've got products, you've got refineries stopping because basically the crude is not there or it's the wrong type or all this kind of stuff. So dislocations in the market are massive. And it's not going to be solved by somebody saying there's more supply or less demand or whatever it is. This is a political decision. It's the same with the Fed and the market. The Fed is going to cut or raise or whatever it is. It's absolute bollocks. The markets are stuffed. It doesn't matter what the
That's
Fed
a French
does.
word for it's a
Yeah.
lie, right? Yeah.
Yeah. What are the Fed going to do? Increase 50 basis points. The S&P would collapse. Biden would basically disappear, or so would the Democrats before the midterms. You can forget about all this stuff, all this posturing, and we're going to do a no-fly zone. No, we're not. We're going to send them jets. Well, maybe, and it's not going to happen. Nothing. Fed is going to do what it absolutely.
Well, it's not
nothing.
so long ago that many, if not most, market analysts, including on this program, were saying Ukraine is nothing. That's just 200,000 soldiers out for a Sunday walk. Clearly not. And I would say the same, be careful about China. There's serious stuff happening there. 14 provinces locking down. You've got the National Convention of China political party in 6 months' time. This is a big issue, I would suggest. World's biggest oil importer already in a downward declining import for the first 3 months of the year, expected to last to the first half of the year. These are all very tangible data points. Let's go to the survey question today and let the room have a view on this. What is the biggest threat to global growth, oil demand of these three? Possibly all of the above, you might say, but nonetheless, what do you think is the biggest threat to global growth / oil demand from these 3 points? Malia, looking forward, of course, this is Monday, as we started out this morning, talking about the week ahead, the Fed meeting, the outcome, the Iran talks looks also from a supply point of view to be disrupted. What do you think is going to be the biggest factor for the financial markets as a whole this week, not just for oil, but ultimately for the markets as a whole? More banging and noise out of Ukraine doesn't seem to me to be, at this point, it's sort of settling into this horror everyday thing as we've seen in the past. Your thoughts?
So this morning we had credit growth data from China on the February side, which came in a lot softer than expected. That actually is very weak for China on the macro side. The tech stocks in China have been weaker. There's further talks of crackdown. So the news on China has been quite bearish. We have the FOMC on the 16th, which is this Wednesday, which will be very important to see what the forward market rate guidance is. As you can see, the bond market has been in chaos. The 2-year, 10-year curve has been declining every single day, despite the positive headlines on Ukraine talks or not. So the macro market is in a state of distress. Bonds, credit, equity, and that's what's driving asset markets this week. And as I mentioned, Friday will be very important from a negative gamma point of view in terms of when all those puts expire worthless, the market will be left open to a vulnerable shock on the downside because that protection expires. So there's a lot of technical factors, but I think these are the main sort of events. Forgetting the fact that we could hear some sort of a compromise, we don't know yet, but the macro on the financial side is quite bearish in terms of the momentum this week.
Ali, the other story that came out over the weekend, and there was, as we mentioned earlier, the talk last week, the UAE, in the middle of those UAE commentary around the oil markets was the noise also of some disagreement between Washington and the Gulf states, and maybe they're not as aligned as they used to be, or at least not at the moment. The FT's carrying a big story on that. But we did have this defense pact coming that's building within the GCC, sort of unprecedented steps between the six countries after a period of time in which they've had some unalignment. Your thoughts on that as a sort of outlook for the region, this idea of greater cohesion amongst the GCC, given the instability in the neighborhood?
You know, Sean, is the most difficult position you want to be in is to be asked to take positions. And this is what the Western, requesting us to do. When I say us, means Oman and other countries in the region.
Yeah.
It is difficult, and it is almost impossible for any countries in the any country in the region to take position, because you want to continue with the West. At the same time, you need the support that we had in the OPEC Plus from Russia. So you cannot say to anybody, to any one of them, I'm with America against Russia, or I'm with Russia against the Western countries. So it is a very difficult position that we are in at the moment, and I wish
it does seem that the on that point, and I brought this up in the past, that the Gulf expects America to choose, i.e., that the West has to choose the Gulf GCC over others, let's just say, that whereas China and Russia are allowed to play with both. China is allowed to have very good relations in Tehran and Riyadh and so forth, but the West is not. Is that position tenable to continue at this time, do you think?
It is either way. I mean, you just took it from the other side. I see it the opposite way. Is that we have been, put in a corner and say that either with us or you are against us, or so sort of kind of opposition, which is, I think, it is very dangerous, and nobody will take a side at this moment. So yes, I mean, it's a difficult time. And it is something that we have to watch very carefully in the coming few months from now. I hope that the Europeans and also the Americans and others will understand our position. I mean, we are ready to play a political position, a political, let's say, intermediate. But to take sides like what Qatar is trying to do now, and the minister is going to Russia, and then after Russia he will go to Ukraine, and so on and so on. So let's just use this, entity of GCC to try and bring everybody to the table.
Well, there is that unique opportunity on the Ukraine. I mean, it's certainly having relationships with both camps. But just quickly to sort of follow up with you, Ali, given that the Iran talks are kind of on a knife edge now, another big factor this week, how important is that reaches a successful conclusion, and the consequence if it doesn't?
I mean, enough is enough. I mean, we need stability in the region, and we were almost there, and there was a lot of rumors coming out from the meeting saying that the documents are ready, they are just waiting to be signed, and then suddenly things change to 360 degrees. I don't know what happens, but we need to see stability. We need Iran to enjoy normal life again. Nobody is looking for any kind of sanctions in the region. Iran is our neighbor, and you cannot change the geography. They will always be here, and let's just be friends and go back again to normal life, like we used to do. We used to live. I mean, but this is like a dream. But anyway, it is possible. It is possible. Iran is not too far from signing. I don't know what happened during these 2 3 days. But let's just try.
We have a
to-
very unusual moment, it would appear. And of course, trying to look through the fog of the reporting, is this a strange moment where Tehran and Washington are actually on the same side and Moscow is on the other? I don't know. Let's give Omar the last word, as he's the one putting money on the line every morning. What's the survey result? Ukraine war, the biggest threat to global growth, oil demand. Omar, how do you see this week playing out? Obviously, you're on the long side, so you're expecting continued trajectory upward, maybe.
I've got no idea, but I basically, when you got no idea, it's not time to do anything. So
Right.
I basically stick and we see how it goes. But I think it's more complicated than the war. And I think, all these, it's quite interesting to think, why do we have so many geopolitical mess ups everywhere? Or, why? Is it because the, world leading hegemon is doing just great? Or is it because, they're not doing so well? I think basically because they're not doing so well. So do we expect more geopolitical upheavals? Yes. And I think that's good for the price of oil and good for the price of commodities. I hope OPEC sticks to what they've said and what they will do, and that they don't get dragged into this, because the only reason to increase oil production is political, is to hurt somebody or not hurt somebody. And I don't think they should do that. I think they should just stay and do what they've said they would do. And basically leave the market up to the market, and the market will decide, and the market will, see what the price is based on what the politics, it's nothing to do with supply and demand. It's just to do with the politics, so to speak. So let's see.
Okay, well, let's wrap it up there this Monday morning. My 2 pennies worth is I'm still rattling in my brain the fact that a few comments by a random ambassador in Washington, although notably connected to a major oil producer, could send oil prices falling by over $10 a barrel. That tells me this is a fragile market. I'm not sure it's as bullish. We've taken on, as Omar said himself, I think in the region of 4 or 5 million barrels of oil of disruption out of Russia, and yet we're only at $110. What does that tell you? 5 million barrels out of the market supply at this time of great tightness. We should be at 150 already. This is a weak market. I'm not sure where the fractures exactly are, but I'd be cautious of that. Whose fractures, they're there. Maliha, lovely to have you. Thank you so much. Ali, as always, great to have your insights. And no one like Omar Najia to wake you up on a Monday morning. Thank you, Omar. Have a great week, mate. See you soon. All the best.
Thank you, Sean.
Thank you. Thank you, guys.